really interesting session planned today. We're going to be looking at student housing. Thanks very much for that, the presentation there, Stefan. And I'm going to bring in some of those things. But let's start with the introductions first of all. Rainer, let's start with you.
Sure, thanks, Richard. My name is Rainer Nonnengässer. I'm dealing in Germany now with student housing for more than 10 years. I'm with International Campus for 3 years now. International Campus is one of the early movers in Germany in the sector. We are active in Germany, Austria, and the Netherlands, looking at beds in operations and under development. We're heading towards 10,000 overall. And we are backed by Brookfield since 2018. And we are very keen on the sector and will grow our portfolio over the next 2 years strongly.
Super, thanks very much. Brian.
Hi, I'm Brian from Untitled Capital. We are a vertically integrated investment manager, developer, asset manager, and property manager. We've been involved in purpose-built student accommodation for over 10 years now, and we own a property manager called Nido Student. We are active on the ground in the UK, in Ireland, in the Netherlands, in Spain and Portugal, and we have around about 12,000 beds in various stages of construction. We work with multiple different investors, many household names that you'll see, and we, like Ryan, have ambitions to expand the portfolio over the short and medium term. Great,
thanks very much. Mark.
Yeah, thanks, Richard. I'm Mark Holz, Head of Research with CORESTATE Capital. CORESTATE is a full-service integrated investment manager. We have a strong debt finance arm and investment entity. We've got our own operational entities, and we do have a strong footprint in Germany, but also pan-European micro-living student housing investments with our own proprietary operational and brands, which is Join and Unique.
Great, thanks. And we'll pick up on a lot of those micro-living ones as well. Will.
Sure, thank you, Richard. Will Rowson, CEO of GSA. We are a student housing investment manager and operator, and operating from Melbourne in Australia all the way through to LA. So truly global now.
Yeah, it's going to be interesting to pick up on some of those global themes as well with you, Will. Stephen.
Thank you, Richard. My name is Stephen Miles. I work for CBRE. We are the largest real estate advisory firm globally. And I sit in our EMEA Capital Markets team with responsibility for bringing together all our expertise across the operational real estate sectors.
Super. Let's kick off just, I suppose, just looking at, we've now got a route map out of the global pandemic, or hopefully anyway. And I just wanted to pick up on how this has influenced your sector, and maybe look at the short-term influences first. Will, I guess, what have you been seeing in terms of the short-term influences?
I guess the first thing we would say is multi-speed, depending on which country you're in. For instance, Australia, where the borders have been locked for 12 months pretty much, and there's been some long periods of lockdown. It's affected the sector. Whereas if you look at the US, it hasn't been exactly business as usual, but it's not been far off. So 2 or 3% down on numbers. And a lot of domestic movement of students. So it's been very different across the world.
What have you been seeing, Rainer, particularly in the German market?
Well, if you would have asked me end of last year, I would have said to you, we are positive that vaccine programs will roll out in the first half of 21, and that we have a slight chance to come back to lectures on universities in autumn 21. Seeing the situation now, I'm a little bit hesitant because on the continent opposite to the UK, all these programs are massively delayed. There's a lot of political debate around quality of vaccines and things like that. And this influences the higher education sector, which in Germany is mainly public. So there are less private initiatives or spearheads in that movement. So the sector currently is completely quiet. And therefore, I would be very shy in giving prognoses when we come back to normality as regards educational sector and in consequence accommodation. We have been so far quite good off. For sure we had drops in occupancy due to the fact that mainly the international client base, specifically the intercontinental base, has more or less disappeared due to travel bans, due to not existing infrastructure. With there are no flights from China, no one could come. Yeah, visa policies have become more difficult, all these things. And therefore, we are quite good off as of now compared to others or even other sectors, those who have more an hospitality angle or stronger micro-living exposure are suffering more than we do. And B, we strongly believe that this, at the end of the day, it will be a passing phase, and we will see young people coming back to universities because they're desperately looking for it to come back. And that will drive occupancy rates then to the levels where we all used to have seen them.
Yeah, that's interesting. Mark, picking up on that, I mean, Rainer mentioned there the comparative also with other asset classes. You're looking at research there overall for CORESTATE as a group. How do you see the comparative with this asset class, particularly, I guess, in terms of the short-term impact, but also maybe looking more towards that medium and longer-term impact?
Yeah, I think the short-term impact, Rainer has perfectly described what's going on. The situation is still difficult, still unknown to a large extent how will universities react. I think yesterday there was quite some interesting news published that the number of new international students coming to Germany declined by 20%, which I find quite an encouraging number, because minus 20% still okay given the dramatic situation that we've just gone through. Most of that is clearly coming from Europe and the intercontinental students. That's a different story. Now, looking at the other subsectors of the micro-living universe, it very much depends on where you are and what kind of asset you're looking at. The more you go into the hospitality realm, the more difficult the situation has been. But that said, within the hospitality realm, the service departments have actually held up relatively well compared to the classic hotel realm, because of the long-term accommodations that you have. They really stabilized our portfolios, and the occupancy rates in our portfolio in Germany, for example, never really fell below 30-40%, and all our assets remained open and operational. So relatively good news on that end, but clearly that's a far stretch to the resilience that we've seen actually in the student housing sector. Even though universities' situation has been difficult, our occupancy rates remained above 90% in the German portfolio, which is quite good numbers, very, very operational numbers there.
Yeah, and Brian, what's your experience? Because you're obviously looking across Europe there. So in terms of the short-term ones, but also pick up that point around where you see this heading more in kind of, the medium longer term.
Yeah, so I think most people are experiencing some P&L disruption or have experienced over the COVID phase some P&L disruption, and that's been the case in the UK, where maybe UK undergraduates have returned home and there's been pressure on landlords to deliver some form of rent refund, and everybody in the sector has been affected by that. But I think investors and certainly we are taking a medium-term view and saying, well, by September 2021, and I accept it is different location by location, but the domestic student markets in most locations seem to be wanting to go to university in September 2021 or whenever the academic years start. And that gives us some conviction that we will be seeing a return to largely business as usual from September 2021 in terms of occupancy, albeit how you operate the residences, of course, changes to become more COVID secure. But if you think most of the assets in the sector are self-contained en suites or studio rooms you get your own space, you can be reasonably confined. It's as safe, if not safer in many cases, than the family home. So we see that this is very much a game of short-term disruption, and it's a P&L issue, not a balance sheet issue. And of course, the one of the largest components of that is the international traveling student, as Rainer quite correctly identified. If you can't fly from China, you're not going to get the bus. So we are seeing the cities that have greater proportion of international students will have a greater level of effect, where you're pivoting your marketing strategy towards domestic students in the event that internationals aren't available. And for what it's worth, I mean, international student applications across Europe, in the UK, for example, international non-EU students applications are up so far in the UK. EU students applying to the UK, not unsurprisingly, are down. But I think overall it'll wash through, and by September this year, we'll see largely business as usual. September 2022, hopefully this will be in the rearview mirror, and we'll be able to move on strongly.
Okay, I'll pick up a little bit on that view about when we begin to get back to normal. But of course, if you've got questions, one of the joys of being live is that we can answer them. So if you've got questions on the right hand side of your screen, as you look at it, you'll see a Q&A button and a chat button. Feel free to use that. I'll be monitoring that throughout the panel. So if you've got questions or comments, please do put them in there, and I'll make sure that we answer those in the panel. I'm going to come back to that point in a minute, but Stephen, I wanted to pick up with you in terms of the flows of capital. What are you seeing there? Are you seeing, was there a dip in terms of interest that is now beginning to pick up, or what are you generally seeing in terms of investor appetite?
Yeah, I think we've seen that investor appetite has remained pretty robust. I think there are a couple of factors there. I think that we've already picked up on the relative performance, and I think that some other asset classes have not, they've also struggled, and arguably more so. Hotels are an obvious one, retail too. But I think fundamentally, I think that we all believe that education is here to stay. Now, what that looks like, I think, online, hybrid, I don't think that has. And I think the anecdotal evidence is that whatever that looks like going forward, that hasn't changed the desire of the student to be with other students in a community where they're experiencing the education rather than just actually, taking on board knowledge, which can be done in a multi-factor way now. So look, I think that the investor demand has remained strong. A lot of our biggest investors are underweight in student and want to have access to that. So no, we've actually seen demand stable, if not increased. And actually, over the last 12 months, we've seen compression on yields across the sector. I think what I would say is, to the international student point, I think you do need to be a little bit more diligent on your underwriting. I think, let up velocity and potentially that price point you're aiming at, because I think in some markets, the price point is specifically aimed at the international community, and maybe that is going to be something that softens over the next 12 months. But I don't see it being a longer term trend than that.
Okay, good. And we'll just picking up that point around the medium and longer term, prospects that you're seeing. It'd be good to get your point of view, particularly looking at that global side. But also in the presentation, there was the point made from Stefan that student housing was now you know, in some ways, in terms of investor intentions, above office and retail and some of those previously larger sectors, and that 65% plan to invest in student housing as an asset class. How do you see, how much room is there in the market for this kind of thing? What are the prospects of growth? And if more people are kind of pivoting towards all manner of residential and particularly the student housing side, is that going to have an effect on pricing, do you think?
Well, we are a niche sector. You can't get away from that, and that dictates the volume that the sector can swallow. And obviously, retail, office, and logistics, particularly, are much broader and deeper. So there's a little bit of a filter, or whatever you want to call it, because of the niche element of the sector. I think we're seeing a broad range of investor demand, and a broader range than we have seen in the past. And I guess that's dictated by the vehicles that we run, and our vision of that is dictated by the vehicles that we run. But we see it all the way through high net worth, private wealth channels, all the way through to the largest global investors. And I think certainly the COVID effect has exacerbated some of the challenges in some of the other sectors. Okay, it hasn't been challenge free in student, but I totally agree with Brian that hopefully this is a short-term blip in the progression of student housing PBSA around the world. And I think most investors see that. I mean, there are some challenges with regard to balance sheets, banking relationships, through the reduction in income during this period. But I think most investors see beyond that and realise that the growth in middle classes around the world, particularly in China and India, for instance, and the desire to have for the students and the parents to get the best education they can get globally is going to drive the sector and continue to drive the sector. So look, the aspect that has become so much more important per market has been that balance between domestic and international students, and for obvious reasons referred to earlier on. And I think it will change investors' due diligence and focus to some extent going forward, in case, heaven forbid, there's another event like this. But if there's the point that Stephen made about domestic demand and its price point versus international demand, and that price point is also an interesting one. The debate before the pandemic was all about value and a value product, certainly in the UK. And I think that being able to set your price point and set your product for the most likely market is going to be very, very critical moving forward. It's going to be top of the list for both operators and investors within the sector.
And are you expecting things to sort of come back from, autumn term 2021? So this autumn, Will, is that the sort of timing that you're looking at for Europe at any rate?
Yeah, I was going to say, if you count out Australia, for instance, because international borders are shut, it's hard to see how quickly that will recover. But for Europe, I think it is just a little bit too speed at the moment with regard to vaccine rollouts. Rainer referred to that earlier, and I think that's right. That's what we're seeing. So, but let's see. Borders have got to open up yet. London, for instance, is a very international reliant market, more so than anywhere else in Europe, really. So if those borders don't open quickly enough, then it could affect September. We're all very positive about September, but it's now 6 months away, and the world is sort of coping with this gradually.
Yeah, no, I think that's interesting. It was always perceived to be quite a resilient asset class. I mean, I remember discussions around before, if there was a, in previous times of crisis, student numbers had already, always gone up, economic crisis, because students tended to stay longer, and actually in poor economic times, if you couldn't get a job, you might as well get more qualifications and ride that out. Is that still the case? Do we think that resilience is still the case, given that this is a different sort of crisis, Rainer?
It's a little bit of a speculation element, because no one really has a plan or an idea how long it will last. Yeah, but looking backward, we have seen just what you described, that with each and every recession, the number of students has grown. And looking into it from a German perspective and comparing it with 10 years ago, when we had the financial crisis around currency, some countries have been hit harder, especially in the Mediterranean region, and others have been hit less hard. And my expectation is that we will see a similar trend, might be in 22 or 23, that we will see a stronger inflow from young people from Italy, from Spain, due to the fact that these economies will be way longer depressed than Germany, Austria, or the Netherlands. So I expect a similar movement as 10 years ago. And if you look at the student numbers in Germany, we have seen a shift where domestic figures have been rising pretty sharply, also due to the fact that traditionally a lot of Germans that go abroad couldn't go. And had to stay in their home country, and have absorbed on a quantitative basis the lack of internationals. For sure, if it comes to spending power, some internationals are way more attractive to the sector than domestics. And I think that's not only the case in Germany, but it also underpins the resilience of the sector. And as said, at latest in 2022, when infrastructure is also rebuilt, we expect to come back to a level of normality.
Okay, good.
Richard, if I may add just one point here, because you're right, the students' numbers have tended to go up during times of crises, but there's an overlying long-term trend that the share of the population with a higher degree has continued to go up for 30, 40 years. So it is a long-term trend, and I don't think that stops now. I think we are living in incredibly disruptive times today, and the higher your education, the more likely it is that you will survive in a very challenging labor market situation, in an increasingly challenging job market. Because we're talking now about automation of office jobs, to be fair. We're talking about software taking over office jobs. And the thing that you can do to be still relevant in the job market is to get in high education as possible. And I think this will very long-term drive the demand for universities and also for student housing. So therefore, I see student housing as one sector with a structural tailwind. Actually, it's getting structurally stronger. Looking ahead, long-term, that's pretty much a mid to long-term view that I'm putting here.
Okay, good. I've got a couple of questions in that I just want to deal with. The first one's from Ava Cueto. Ava, thanks for joining us. What are the current and expected yields in the co-living Spanish segment? Thank you in advance. Now, I don't know. Does anybody have a view on co-living within that? Mark, is that anything you've got an idea on Spanish yields? I mean, it may be useful to do micro living, and I suppose that will give us an idea.
Those net initial yields for co-living in Spain, that's an extremely specific question to ask. Because there's simply not too much transactional evidence in the market. That said, we're of course looking at those opportunities, and it very much depends on which city you are. Are you in the A cities or are you in the B cities? Are you in an A location or B location? But roughly said, you can be between, I think, 4 to 5% net initial yield, somewhere in that realm, and that depends very much on the A, B, the other A, B location, B, A location, something like this, wherever you find the specific asset, and also the target audience that the asset is aiming at.
Okay, good. Did that concur with your view as well, Stephen?
Yeah, I fully agree. I mean, there's a lot of variance in the market, so asking for an average yield is a little bit meaningless at the moment. But yeah, it's in that range.
Okay, good. I hope that helped, Ava. Philip also asked a question. Philip Roveda, thanks very much, Philip. Has anyone faced scheduled refinancing during the pandemic in this segment, or upcoming refinancing in 2021? And what has the bank's sentiment been on debt levels, interest, equity, recapitalisation? So that's an interesting one just around the debt side. So I don't know whether anybody is in that position or is able to share anything or any thoughts on that more generally in terms of the, I suppose, the attitude of banking and finance to the sector.
I can talk about that. So listen, I mean, if you've got less money coming through your books, then the banks are going to be very interested in that. And that has been the case throughout the pandemic. But I think my view, and certainly the conversations I've had with the banks, has been they kind of get it and they want to be supportive. So we have, we've been in a situation where we're having conversations with all of our banking partners. All of the banking partners have been supportive of this being a short-term blip, and have taken very sensible views on the debt. Now, and it's different jurisdiction by jurisdiction, of course, how people are viewing the world. But as a whole, the banks have been supportive of existing finance. With respect to placing new facilities, and we're in the market for some at the moment in different jurisdictions. Again, we've had a great deal of inbound interest and from the banks in response to the conversations we've started with them. I think it's reasonable to say in some cases margins might be slightly higher and LTVs might be slightly lower, but nothing that's going to capsize anything if you have a reasonably robust business plan. I think it's fair to say that banks at times of crisis will always flock to quality. And so they look to their existing partners, they look to institutionally acceptable operators, they look to robust business plans. Yeah. So my view is, banks get more sensible and less euphoric in this environment. However, generally, I think we are quite a benign asset class for banks, and they're looking across their loan books and thinking we have serious problems, or the banks have serious problems elsewhere in other asset classes, which are clamoring for their attention way before the students, which typically have a very strong sponsor, an institutional scale asset, and maybe a temporary blip or a temporary shortfall in some of the expected cash flows. But generally speaking, we're not seeing covenants be broken left and right because occupancy has generally been at a level where you can still afford to give the banks what they need. So overall, my view is the banks have been really supportive. I think we should applaud them for that. And as I say, this September being reasonably strong, the banks will be a lot more comfortable. If you're a bank lending on a chain of Balearic hotels and you're about to enter your second summer of no revenue and high costs, then that's going to be far higher up your problem list than purpose-built student accommodation block is.
Okay, interesting. I'm just going to move just to pricing for a brief moment, just because the questions come in from Katarzyna. Thanks very much for that. It was mentioned that the occupancy remained high in PBSA, but what about rental rates? How was it impacted? So in terms of, did we have issues with rental rates versus occupancy, even if occupancy was high? Did there need to be an adjustment in terms of rental? I don't know if anybody wants to pick that up. From the slides that Stefan had, it looked as though there was less of an issue with that actually, but I'd be interested to get anybody's view.
I think what is significant is higher marketing spend. You need to be more active in the various target groups, yeah, and looking across the sector, there are some activities on discounts. Yeah, bring a friend and get 1 month free, or move in until in the next 4 weeks and get 1 month free, things like that. But I have not seen, and our research does not show any signs that somebody really significantly has lowered top line rents.
So discounting hasn't been so much of an issue. Is that true for you, Will, as well?
Look, it differs around the world, but I think generally, yes, it's right. And I agree on the discounting point. In markets where there's the supply-demand balance is more in balance, then there have been various discounting schemes, but they don't tend to be reduction of rent. They tend to be months free or vouchers or whatever they may be. You know, in the US last year we saw rental growth still, and you know, there was small amounts of rental growth elsewhere in the world, but the US was the most resilient market from that point of view.
Okay, good. And I just wanted to pick up with you, Mark, as well, that, you know, micro living and student housing, you know, do share some similarities. And I know that CORESTATE is operating in both of these sectors. Is your sense that they'll both prove similarly resilient in a way, or is micro living fundamentally, you know, looking at different drivers really for occupancy?
Well, I think the drivers are different, yes. PBSA are clearly student-driven and university-driven, and where do the students want to be? If you're looking micro-living, if you're looking specifically service departments, you're more in the business realm. So that's two different animals, even though the best universities can also be in the cities where the best businesses are. So then, you know, share a city, but well, generally there's clearly different drivers, but I do strongly believe that we will remain in a highly mobile world, in a highly dynamic world, and I do also feel like where we're headed is much more about choice. Where do you want to live? Where do you want to work? And that does not necessarily have to be where your company's headquarters is. So you can choose to live in Berlin, even though your headquarters is in Frankfurt. And this attitude actually helps these more flexible, more tailored towards, you know, the digital nomads, the highly mobile societies. So I think that there's good reasons to be optimistic for the sector to see at least in the mid-long term, quite a good renaissance. You just have to pick your cities right. You have to know where's the growing cities, where's the leading, where's the good cities, and you have to offer the right product, the right price point for the right city, of course.
Okay, good. And Stephen, I wanted to look a little bit about activity in the market, the capital markets, acquisition markets. What are you seeing there, and also in comparison to some of those other, you know, operator-led businesses?
Yeah, I mean, I think that last year we saw really strong numbers on the investment volumes for student housing, around 9 billion across Europe. Interestingly, the UK remains the biggest market and the most mature. I mean, the penetration rate is the highest across Europe. So it's a liquid market that's got track record in transacting. When you're moving across Europe, I think the challenge is finding up and standing stock. So that limits the amount of trade that you actually have. A lot of the transactions we see are people going into development and forward funding situations, and that remains strong. And I guess, look, the other thing with the forward funding situation is that you actually kind of take yourself past this pandemic scenario as well. So you're actually jumping over the problem, if you like, and sort of landing back on the trajectory of the long-term trend. So I think the forward funding market has been quite interesting for a lot of investors and gives access to the right kind of product. With regards to other sectors, I mean, I think that, you know, I've mentioned this before, but it's pretty difficult right now to underwrite, you know, whether that's retail, offices, hotels. You know, there are underwriting challenges across all these sectors. Some of them were going through strategic changes, and some are just going through a pandemic-driven, bump in the road.
Okay, good. Rainer, Brian, what are you seeing in terms of acquisitions? What's the market been like for you, really? Rainer, let's start with you.
Yeah, I think you need to differentiate between operating assets and the new developments. Yeah, if you look into the German market on operating assets, for 6 years now, we have been putting together a list of all assets that we have seen being traded in the market, and the vast majorities of these are not held by Nido, GSA, CORESTATE, or us. It's a big variety of mainly single assets held by pension schemes and so on and so forth. So they are long-term investors, which by nature limits the transaction volume in operating assets compared to the UK, where you have a way stronger institutional transaction business when it comes to PBSA. Yeah? And the number of new schemes is always in competition with resi developments, as we share building regimes, as we share access to sites and things like that. So there are similarities. And by nature, we have a situation that the number of available schemes for acquisition in Germany is pretty low compared to other markets by these circumstances. Looking into the current situation, my impression is that the absence of a lot of international buyers due to non-existing infrastructure, if you can't see a site, it's hard to convince an investment committee to buy it. Yeah, that has an impact. But also, as Brian mentioned earlier, having teams on the ground eases such situations. And we see those who are currently buying are the ones that have teams on the ground. And for us, we have been quite successful over the last months in acquiring new schemes, to a certain extent also due to the fact that competition currently is lower by the mentioned facts.
Okay, that's interesting. Is anybody else seeing sort of lower competition in the market generally?
Listen, I think my view is slightly different to Rainer. I think that over the last 12 months, maybe 6 months, there's arguably been less transactional activity in the European market as investors and operators hunkered down, dealt with their existing books, stabilized those assets and made sure they knew what the future looked like. However, we're starting to see increased institutional investor interest in the sector across Europe. And that, as ever, is different country by country. As Rainer said, absolutely right. You need to have boots on the ground in all of these jurisdictions that you want to transact in to make sure you can physically lay eyes on an asset and look the developer square in the eyes and make sure you know that what you're getting for. And we've been able to transact in Spain and in Germany recently for exactly those reasons. Boots on the ground. We can do everything we could do with visiting dignitaries from other countries with the local teams on the ground, which is great. And I think definitely investor sentiment is starting to lighten up on the sector for sure. People are starting to move around and they're starting to want to do deals. A lot of funds have a large unspent allocation to real estate, as you know. Other asset classes are arguably less attractive with a particular focus on retail. It's difficult to put your money over there, so those funds need to find a home elsewhere. And the underlying fundamentals of student just seem really attractive once again. But it's a different strategy per jurisdiction for sure. So if you're in Spain, Portugal, there's very little standing stock to buy. If you're in Germany, there might be some standing stock trading infrequently, but it tends to be quite tired and requires a significant amount of asset management, which might not be within somebody's strategy. So the depth of available opportunities in the UK for sure, standing operational stock, as well as the potential for development, makes that continue to be the largest market. But I think increasingly we're all turning our attentions wider into Europe, and certainly the Spains, the Portugals, the Italy, the Northern European, Germany, Denmark's, Nordics are all coming increasingly within scope. And the nice thing about having the UK and the US to look back on is all the questions we get asked when we go into new jurisdictions, like, what's the pound per square meter available in a regular residential apartment versus PBSA, all of those arguments which we all know really well. And we know it's a different asset class, we know it's a different product, we know it's a completely different set of services. So a pound per square meter comparison is a data point, but only one of a number of data points, which is not directly correlating to the success of the PBSA opportunity. So all of those arguments, we can all look back at the more mature markets and say what happened in the UK, but in Spain with the Spanish adjustments made. Now, there are some cases, especially in Southern Europe, where there's a large preponderance of catered accommodation, a large preponderance of twin rooms. So there are some structural maybe issues there where they aren't as resilient to COVID as a single ensuite room or studio might be. But we, again, like ever in real estate, it's a location game. It's about the micro location, the strength of the individual market, that supply demand imbalance. And I think if anything, we have to, as a sector, become be more sophisticated with our underwriting and take that long-term view, which I know those of us participating in the call do. The people who've been washed out in the sector right now are those ones who turn all the dials up to 11 and are a local developer who has a parking lot and decides to build a student accommodation block based on €600 a week rent and all studio scheme at 12 square meters. And you turn all the dials up to 11, you have a scheme that should never be built. So I think those are the guys that are having difficulty now. But those more responsible investors, like us present on the call, long-term investors with a long-term view on the sector, have been pretty resilient, and investors increasingly are recognising that and coming into the sector. And to Stephen's point before, yields in the CBRE report on the UK recently came out and described yields as hardening in every PBSA subsector, with the exception of arguably secondary PBSA in secondary cities. So I think that's a factor of investors recognising the resilience and strength of the sector.
Yeah, Richard, may I just add to that? I think it's not just, we're talking about the travel, ability to underwrite and get comfortable with the project. It's not just, that doesn't just happen on an asset level. I mean, what's difficult at the moment as well is obviously meeting operational partners, and the success of a scheme is invariably heavily invested in the operational excellence of your partner. And I think not being able to go and meet the teams or understand exactly what they do through looking at existing schemes, that's also that's also been a bit of a break on the market as well. And I think that's why so much of this institutional capital coming into the market has been looking at programmatic schemes with partners that they can rely on to then roll out to the standard they expect. So I think that's also been a factor in the some of the volumes and some of the transactions that have been going on.
Okay, good. I wanted to pick up on just a couple of the things that have come up. Obviously, there's been a fundamental rethink in some ways at the moment, or at least a lot of discussion around it. We'll see if it comes out. Rethink on the office from work from home, and a lot of students have having to study from home. Is that going to lead to any fundamental shift, or ultimately are students still going to want to go to a particular city or to a particular university and be there physically? Are we going to see any shifts at all with that?
Can I give you a live example?
Yes.
I've got a 21-year-old daughter who was desperate to get back to Nottingham University when she could. So I don't know if that is reflected throughout the world, but I have a hunch that it is. And look, we've seen where the regulations allow, we've seen students wishing to get back into accommodation. And look, it's been a challenge for the operational side of our business to run residences in a COVID secure way. And we've learned a lot from that. And I think some of that will be lessons that we take forward in future and will be implemented in a longer term basis. But I don't see, all I hear is pressure on students wanting to come back. It is going to be, September is going to be a big test of that, and it will differ around the world. But I think we're all pretty confident that most students want to get away from home in the nicest sense and have as much fun as they're allowed whilst studying, obviously.
Let me echo Will's point. We conducted a survey with the NIDO students, and of the order of 85% of them said they would still come to their accommodation, even if they knew there would be no face-to-face lectures, because they were desperate to get out of the family home. Because listen, we can all remember being 18 years old and exactly the same. I was desperate to move out of the family home, not because I don't respect my mum, but because I just wanted to spread my wings. So you've got this kind of position where the students are desperate to go to university. Universities are desperate to have them at university in order to continue with their academic excellence, and in the UK to be able to charge the fees that the universities charge. Government is desperate for students to go to university, and frankly, parents do not want that 18-year-old child sat on the sofa stealing the remote control every day. They want them to go to university and to Mark's point, enhance their career and study and be successful in life. So everybody wants students to go to university, and that's one of the reasons we have such high conviction on the sector.
And I also think the professors do want students to be in the universities as well. They totally prefer face-to-face lecturing and the direct conversation with students. So it's universities, it's students, and it's also the professors who want to go back to the old-fashioned way of face-to-face teaching.
I mean, Will mentioned it a little bit there, that there may be some positives from this in terms of, capex that's been done, or maybe an increased focus on well-being, student well-being, and those kinds of things that do seem to be positives potentially that have come out of that. One of the other kind of growing things has been ESG and a move towards impact investment, which obviously includes educational buildings and student housing. Do you think that's going to be a growing element in terms of investor demand and interest for this sector?
Do you want me to go first?
Yeah, why not, Will?
Short answer is yes. Short answer is yes. The long answer. Yeah, look, it will definitely be, and again, it varies in different parts of the world. There's a lot of talk about ESG and implementing ESG policies, and it varies how much of that are actually put into place. But I think Europe is the hotbed of actual policies and implementation. So I think it will become hugely more important, if it hasn't already, with investors' criteria.
Okay, good.
And I think it's not only on the investor side, Richard, it's also something that has an increasing relevance for young people as tenants, looking into the quality that you provide. And that's not only focusing on amenities, it's also looking on energy efficiency. How do you treat waste? How do you recycle water and things like that? And I think in the next years, this will have a way stronger impact on young students to choose where they stay.
Yeah, I think that's interesting. Let's just look a little bit. We've got kind of 12 minutes left, so I just want to bring it down a little bit to some of those more investment focused topics in terms of locations and what might be driving the opportunities. What are we seeing? Maybe Mark, let's pick up with you in terms of the different geographies, looking at Europe. Where do you expect to see more growth? I mean, Rainer was expecting growth to come from Southern Europe, students from Southern Europe into Germany. But what are you seeing in terms of the different geographies and cities?
Yeah, good that you mentioned cities here. It's not just countries, it is cities and universities competing with each other. So the better your city and the university is, the higher your chances are that you're attracting students. I'm relatively bullish on Germany in general, though, if I can say this, especially from an international point of view. It is a highly liberal and open economy. It is safe and secure. It is actually very, very affordable if you compare it to the wider European spectrum, and offering quite a lot for your money. And now that the UK is basically shot himself on the foot with the Brexit. The US keeps fighting with China to some extent. Germany with all its there's a lot of English taught courses, so there's quite a few reasons to think why Germany will remain very, very relevant going forward in terms of international students coming to Germany. And that is relatively new, because Germany was pretty late to that party, if I can say it this way. It's only really gone up notably over the last 10 to 15 years. So relatively late to that party, but I think quite a bright future in front of it.
And is this particularly for areas like Berlin, which are famous kind of around the world in a way as interesting places for young people, or is that across all of the cities?
It's probably not all of the cities, but clearly the extremely polycentric nature of Germany makes it, there's dozens of interesting places where you can go to. It's Berlin, it's Munich, it's smaller cities like Heidelberg, Aachen, and actually, this is making Germany, from an investment point of view, very interesting as well, because you can diversify within one country and not putting all your money into London or Paris or where Oxford, where your universities are. So I think, yes, there's more than just one place to go to for both for students, but also for the money, for the capital targeting Germany.
Sorry, Stephen, you wanted to come in on that?
No, I was going to say, I think that strong universities will always attract, strong student numbers. I think some of those cities, though, I think that what is important is cost, and that will act as some sort of ceiling. I mean, there are cities across Europe that are more expensive than others. So I think that, yes, I agree that people want to be in exciting places with good universities, but that's not entirely inelastic. What I could see is that with the UK out of the Erasmus scheme, Ireland and the Netherlands benefit from an uptake of people wanting to study in English. I think that's still a strong driver for the young mobile professional. That proficiency in English is really a draw. So I do see that those markets will benefit from the UK exiting. I think conversely, the UK is benefiting from I've heard investors talk about this sort of, the more global student. And I think that, one of the things I've heard is that, when Blackstone were looking at the student IQ portfolio, one of the things they fundamentally believed in was this growing middle class from the developing world and China and India still wanting to come to the UK and US. And I think some of the political tensions with the US will again benefit the UK. So there's this big relative thing going on as well.
Sorry, Richard, I'll just jump in on that. Our largest transaction last year was buying a $750 million portfolio in the US. And we were looking very, very closely as we bought that as to the schools, colleges that portfolio was based around. And I think one of the differentiators for the US and the UK is the number of universities they have within the top 100 in the world. And that will take many decades to change. So particularly for Chinese and Indian or Asian students generally, that is a big draw, and it will continue to be a big draw to those two markets. And there are different differentiators in the US Power 5, Ivy League, various categories that you have to also be careful of. But I think it's the fact that the UK and US have a larger proportion of that top 100 will be a driver for some of those Asian students and where they end up settling down.
And I think additionally to that, Richard, there's this, we're seeing the structure of job creation change too. So engineering and science-based courses are becoming more attractive to students. And I think some of those universities that we'll just mention, they are going to benefit strongly.
Okay, good. Quick question that's just come in from Bart Sassim. Thanks very much for the Bart. Do you expect consolidation? This is actually the Bart picks out particularly European co-living sector, but it would be interesting. I mean, there was the mention there of some of the smaller operators being potentially pushed out by the crisis. So do we see consolidation in general being something that we'll see more of over 2021 and 2022 in these markets? What's your sense of that?
Well, not necessarily that point exactly, but one of the mantras in our business is we're going to do more in less markets. We're going to focus on scale in markets rather than expansion into new markets where we end up being subscale because the market isn't mature enough. So it's not really a consolidation point, but it's the scale issue that really you're addressing as well.
Okay, good. And just in terms of some of those geographic areas, obviously, as we move towards kind of Eastern Europe, what's the sense there? Is there, I mean, that ought to be an area of potential growth if you look towards Poland and those kind of countries. What's your sense of that? Is that where there's an opportunity? Brian, are you looking in that direction or?
Yeah, well, certainly. I mean, anything's up for grabs, and Poland is a sleeping giant when it comes to students, and in particular international students. You can become a doctor in Poland for something like 10% of the cost what it would cost you to become a doctor in the US, for example. So the Polish universities are starting to, and the Polish government actually is starting to cotton on to that idea. So we do have some sleeping giant institutions out there who got reasonably low rents, low tuition fees, and are opening themselves up to the international market. And we're seeing more and more. I think Mark said before, universities in Germany teaching programs in English. Where we talk to some universities, for example, in Portugal, who say, actually, it's not in English, but if two people want it in English, then we'll turn the whole thing into English. So they're definitely opening their arms. So more international students want to travel more widely. More universities want them there. Governments want them there because they're great for a country, both economically and in terms of that country's soft power projection in future. So it all ends up that seems pretty positive, and I think it would be naive to think that Western Europe and the US and even Australia can hold some sort of monopoly on that education. The world's moving really quickly, and you can still go to have conversations with Oxford colleges who are making plans for 600 years in the future because, hey, they've been there for 600 years in the past, and you can see the way when they do development, we do developments which might last 50 or 60 or 80 years, maybe. They're building developments now that they expect students to be moving in 300 years time. So but that is very much of the moment. That kind of mentality is one it's being learned around the globe, and the universities all have aspirations to expand. So with universities, we think we're all glamorous and clever, but what we do is we feed from universities. So if the universities are growing, then we can grow, and that will be the case in pretty much any country.
Okay, great. We've got a really short space of time left, so I'm just going to do a quick kind of 30 seconds each on this, which is so if we're looking at the investment markets at the moment, I suppose, where do you see the key opportunities? Where are you most interested in at the moment? Let's start with you, Rainer.
Well, our key focus is our existing markets. It's Germany, Austria, and the Netherlands. We still see a lot of opportunities in these. And for us being present in these markets, those are the ones who are easy to tackle. And that's where we will focus going forward. Okay, good. Mark?
Well, same. We remain heavily invested in Germany, but we also do look at Poland, for example. We just opened a student accommodation in Krakow, which you need to have people on the ground and understand those very specific markets. But the supply that you have there right now is very old-fashioned. So having a new, modern high quality asset there really helps. So we're looking at opportunities pretty much across Europe, including Eastern Europe, including Southern Europe, and of course the core markets of Germany, the Netherlands, Austria.
Okay, great. Brian, what about you?
Listen, pretty boring, I'm afraid. Same sort of approach as these guys. We started off in the UK. We still do see opportunities in the UK and pockets of supply-demand imbalance we'd like to be able to solve for. But we see arguably more opportunities, or as many opportunities right now in continental Europe. But the strategies would be different. So in the UK, you can acquire, asset manage, and reposition assets and make reasonable returns for investors. In Europe, there's a little bit of that, but especially when you get to Southern Europe, you're really building the asset class town by town. So I like Italy, I like Spain, but equally I like the Netherlands and Germany and the UK. So that would be my, and Portugal. Okay,
great. Stephen?
Look, I mean, I think notwithstanding one or two pockets of oversupply potentially coming through, I think actually there are opportunities in most markets. There's an under provision of accommodation. I think it's about choosing the right scheme with the right operator. It's that operational excellence that will decide whether something is going to work or not. And I think that I feel pretty positive about the sector. There's a lot of capital ready to come in. There's a lot of opportunity. So no, I'm pretty optimistic.
Okay, good. And last word to you, Will. Where's the next massive portfolio that you'll be buying?
Not necessarily giving that game away, but I guess our focus remains on the US, not exclusively. So US, UK, Germany, Spain, Australia.
Okay, great. Thank you. Thanks very much to everybody for your questions. Thank you to the speakers. Really interesting insights today.